So your brain and your mind start doing these crazy things and thinking about worst case scenario. And it does not help if you are reading the news, watching the news, because the media is infamous for focusing on the worst case scenario.
We're talking political unrest, wars, global pandemics, never forget 2020. And yet the long-term performance of the US stock market continues to plot up and to the right, which is always a good sign.
It's interesting that the stock market is the only market in the world where when it goes on sale, people, instead of wanting to buy more, they go in the opposite direction.
It's not about timing the market, it's about time in the market.
Hello, welcome back.
Good to see you again.
Great to see you too, partner. Welcome back to Living Richly with Curo. This is episode 92. My name is Ann McCabe. I am the CEO and a partner here at Curo Private Wealth. And I'm joined, as always, by my lovely partner, Atricia. I'm digging the blazer today.
Thank you. It's probably the last wear I get out of it for the season. It's a little heavier than I would normally wear, and now it's starting to finally warm up. So I was like, let me squeeze it in. Well, hello, everyone. I am Atricia Roberts, COO and partner here at Curo. Thanks so much for coming back if you've been around the Living Richly pod before or checking us out for the very first time.
We love you all. We appreciate you all. And if this is your first time tuning in to the Living Richly with Curo podcast, we are here to educate, inspire, and empower you on your financial journeys. And today, this is going to be a timely conversation around how to deal with market volatility. If you've been feeling nervous around the market volatility and the news in general, we are going to break down what is happening, why it's happening, and most importantly, give you a roadmap for what you should do when market volatility strikes, because this is not the first time, nor will it be the last. We promise that.
So again, the purpose of this podcast is to educate and inspire. Not necessarily to bore you with history lessons, but we think it's important that we have some context around what is happening in the world today. So as you may remember or realize, and if you don't, I'm concerned that at the end of February, the US and Israel launched an attack against Iran. And in short, Iran is pissed and retaliating. And so what this means is that, aside from bombing U.S. targets in the Middle East, they have also attacked ships in the Strait of Hormuz. And I believe we have probably said that phrase before on this podcast.
We have, for sure.
The Strait of Hormuz has become a very popular topic these days, unfortunately. But why it's important is because 1/5 of the world's oil supply flows through this strait. So now, while Iran is only about a 4 to 5% producer of oil production, a good chunk of oil supply comes through that area. The Strait of Hormuz is bordered by Iran and the UAE. And so this has caused oil prices to spike, reaching over $100 a barrel for the first time since 2022. And this in turn has caused major volatility in financial markets like stocks. So that was a 10-second summary of what's happening today.
So good. Why do you need the news when you just have Atricia? Yeah, we know that market volatility can feel super uncomfortable and it is scary, but it's not unusual. In other words, we should expect it. And today we're going to talk about how to think about market volatility, especially when it is occurring around these geopolitical events, and most importantly, how we can stay grounded. So let's talk about why volatility is so uncomfortable. Because in short, our investments represent our long-term goals, and they also represent our security, both today as well as in the future. And so it's normal that if our security and money that's tied to our goals in the future, if the value of those investments is dropping, which it is right now, it's normal that that could produce a sense of fear or of uncertainty. So you may be thinking, oh my goodness, if my portfolio has dropped by X amount of dollars, could it go down to zero? Could I lose everything? Does that mean that I won't be able to afford the house that I'm saving for? Or I won't be able to fund my kids' college education? Or I won't be able to retire? Am I going to have to work the rest of my life? So you're brain and your mind start doing these crazy things and thinking about worst case scenario. And it does not help if you are reading the news, watching the news, because the media is infamous for focusing on the worst case scenario. And all that does is just increase our anxiety and reinforce the fear based messages that our mind is already telling us.
Yeah. So our job as advisors in our everyday lives is to help keep you grounded. And one way to do that is to zoom out. And so what we're going to do is share a chart. And in this chart, what you are viewing is the return of the S&P 500 or the US stock market over the last 20 plus years. And what it is showing here is that the market has weathered all sorts of events. We're talking political unrest, wars, global pandemics, never forget 2020. And yet, the long term performance of the US stock market continues to plot up and to the right, which is always a good sign. And so our takeaway here should be that markets are resilient, and over time, they tend to move forward despite the short term temporary disruptions. And so this is where smart investment management comes in. Our portfolios here at Curo are built with this level of volatility in mind. And so we always believe in diversification and asset allocation and alignment of your investments to your goals and time horizons.
Yeah. And this episode, by the way, y'all, is a good one to watch on YouTube because we are going to be sharing some visual charts with you. So apologies for those of you who are listening and couldn't see that chart, but it was basically a bunch of different examples of things that have happened in the markets. And as Atricia was just saying, yet S&P 500 is up and to the right. So let's talk now about just how normal volatility is. We mentioned this earlier, but we do have another chart for you. This is one of our favorite charts to pull out when market volatility is high. And so in this chart, what we're looking at is the annual returns for the S&P 500 versus the worst intra-year declines also for the S&P 500, and this goes back to 1980. So the gray bars that you see mostly on the top of the chart, some in the bottom, are the annual returns of the S&P 500 for those calendar years, and then the red dots, which you see each and every year pretty much, are represent the worst intra-year decline. So basically the S&P gets to a certain level and declines from that peak. We call it a peak to trough. So if we look at last year in 2025, you'll see the red dot shows 19%. So if we go back to April of last year, if you remember, that was when the reciprocal tariff announcement came out. Markets did not enjoy that at all and proceeded to sell off 19%. It was a pretty sharp sell off. We then ended up with a V-shaped recovery last year, and to that point the S&P ended up positive 16%. So had you sold in April after the tariff announcement when the market was down 19%, your returns would have been negative 19 or whenever you locked those in. If you just rode the wave and you were in the S&P from January 1st to December 31st, you would have been up 16%. Another year we like to show is the year of COVID, which was 2020. You'll see the red dot in 2020 was 34%. In March of 2020, the S&P dropped 34% over 33 days. It was very rapid, very aggressive. And yet the market ended up, interestingly enough, also 16%, which was the same returns as last year. So, a couple of takeaways. Number one, every single year, with the exception of a couple of years, we have a red dot. Okay. So, what this means is we should expect as investors that volatility is a normal occurrence in the stock market. Yet about 75% of the time, those gray bars are in the positive. So about 3/4 of the time, the S&P 500, at least since 1980, has ended positive, despite the fact that the average annual return, so if you just average out those red dots, it equals about 14% per year. So as investors, we should expect that the S&P will sell off about 14% in any normal year, forget a crazy geopolitical event, and volatility is a normal occurrence. So we want you to think about when the market is down. We want you to think about that like you think about any other sale. And we always talk about how it's interesting that the stock market is the only market in the world where when it goes on sale, people, instead of wanting to buy more, they go in the opposite direction, right? Not only do they not want to buy more, but they want to do crazy things like sell their investments and go to cash, which we're just like, how does that make any logical sense? It doesn't. It's all emotional, right? Think about, we always use the example of like tuna. If you like tuna and you go to the grocery store and tuna's on sale, you're likely to buy more. So that's kind of how we want you to think about when the stock market is on sale. These are good companies that are going on sale. Why would you not want to buy them when they are cheaper? So if you are in the accumulation phase of life, which just means you're not retired yet. So you're saving into your retirement plans, you're hopefully saving into your investment accounts. We want you to actually embrace volatility, get excited about volatility, think of it as a good buying opportunity. So we love when we get calls or emails from clients and they're like, hey, we've got extra cash. Should we put it to work right now? Or should we increase our 401k contributions? We are so proud of our clients when they call us or email us with those questions versus like, oh my gosh, should I sell out of my entire 401k and go to cash? Which the answer is no.
Please don't.
No, don't do that.
So, why is it important to invest in stocks? We know for some investors, stocks can feel scary, but the short answer to why is that historically it's been the best place to grow wealth. So, US stocks have averaged about 11% a year since 1950. Let's say you work for 40 years and you save $10,000 a year in a 401k plan. If you invest that money in stocks, your portfolio would be worth about $2.6 million, assuming a lower 8% return after 40 years. If you save that same amount of money, but leave it in cash, meaning don't invest it, it's just chilling in a checking account, it would be worth about $604,000, assuming a 2% growth rate. And we also have to remember 2020 when the savings yield on your savings account was probably 0.1 if you were lucky. So that's a $2 million difference just by investing your money. And I don't know about you, but 2.6 million sounds a heck of a lot better to me than 604,000. And so what smart investors focus on is what we can control. We cannot control geopolitical events. We can't control market reactions or even the economic headlines, which we've been getting a lot of them these days. What we can control is our asset allocation, our diversification, our cash reserves.
Mhm.
You've heard that before on this podcast, and how much we save. And of course, most importantly, is staying emotionally grounded, right? That's really important when things get really scary around us. And so remember that grounded is key.
Yes. It wouldn't be a Living Richly with Curo podcast if we didn't mention cash reserves at least once.
Oh, wait, cash reserves? We've said that before?
So many times, all the times. All right, so let's talk about common mistakes that investors make during volatile periods, but y'all are not going to make these mistakes, right? Because now you know our listeners and viewers are smart, savvy investors. So these are not things that any of us would do, but we're just going to tell you what other people tend to do during volatile periods. Number one, we've already talked about this a little bit, panic selling. So that's that initial reaction of like, oh my God, I'm losing money. My portfolio's down. I'm going to run out of money. Why don't I just sell all my investments? I'll go to cash. How many times have you heard this, Atricia? Until it feels better, until we get clarity. until this war with Iran passes, right? Like, fill
Right.
in the blank. How many times have you heard that? I can't even count how many times I've heard that. What you're doing if you decide to do this, smart, savvy investors, is you're guaranteeing your losses. You are
Yes.
locking in your losses, okay? And also, because you're outside of the market in cash on the sidelines, you are losing out on not just the bad days, not when markets go down, but the best days when markets go
Mhm.
up dramatically. And we've shared this stat before also on the pod, but if you miss just, like, listen to this very carefully. This is insane. If you miss just the 10 best days in the markets over a 20-year period, just think about that. 10 days, 20 years, your returns are cut in half. I mean, this is,
Oh,
and from a dollar perspective, we are
yes.
talking, depending upon how much money you have invested, hundreds of thousands, if not millions of dollars of difference. Okay. So if you can tell me when the best days in the markets are going to be and you can get back in, awesome, go for it. Right. But as we're going to talk about in a minute, nobody can do that. So
Right.
this is why it's so negatively impactful to make the decision to panic sell, because you're sitting on the sidelines. By the way, you're selling low, and then when it feels better, when you said you were going to get back in, it's going to be at a high, right? So you're doing the exact opposite of what we're supposed to do as investors. Oh my God, this gets me fired up. Number two is trying to time the market. We just mentioned this. Again, if you've got that crystal ball, like, you should start a hedge fund and buy a private island, because yeah, you can time the market. You can know when to get in and get out. We don't have a crystal ball. We can't time the market, and nobody can time the market consistently over time. People get lucky for sure. It is not an actual good strategy. And then last mistake, letting the media headlines fear drive your strategy. What we want to do is not allow the media, which is always focused on urgency and fear and worst case scenario, as we've already mentioned, to dictate what we do with our money and our investments. So, long term planning, as we've talked about many times, requires staying grounded, as Atricia said. It requires staying disciplined. It requires locking in on our financial goals and our financial plan, and not letting whatever the heck is going on in the world and the news cycle, veer us off course. Okay. We got to be locked into our individual plan and the plan that we set out.
Yeah. And don't forget that most media today is for profit business. They profit on your anxiety and fear and continuing to tune in and seeing what the next new headline is. So that's part of the strategy. And so you have to figure out the best ways to turn that off and turn off the craziness around you and stay focused on what's important.
Newsflash, the media doesn't care about educating you. The media does not care about keeping you wealthy and helping you make smart decisions. The media cares about selling advertising. And the more eyeballs they've got on their stuff,
Exactly.
the more advertising they're selling. That is the business model.
Yep. That's it. So keeping you engaged and anxious and worried is a key to that success. So if you take nothing else away from this pod today, which I feel like we've given you so much, remember these few things. One is that volatility is uncomfortable, but it is absolutely normal. Markets have weathered all kinds of volatility over the years, and they have repeatedly worked through that uncertainty over time. Remember, it still goes up and to the right over the long term. Build portfolios with volatility in mind, right? So if you expect that there's going to be volatility, if you know it's normal, then you have to build a portfolio that reflects that. Also, remember that long term investors historically benefit from patience. Staying invested, again, a phrase you've heard countless times on this pod, it's not about timing the market, it's about time in the market. Focus on your goals, what you can control, stay grounded. And then, of course, as always, reach out to us if you need to talk about it. If you're concerned, you're worried, you want a second opinion, you just need someone to talk you off the cliff.
Yes.
Call us. That's what we do every day with and for our clients.
Yeah, absolutely. Amen to all that. All right, my dear, what do we have for a closing thought today?
Okay, well, before I go to my actual closing thought, I just have to note how great you look in green.
Thank you
today.
so
There's
much.
a whole
Happy St.
theme
Patty's Day,
happening.
everybody, all my Irish peeps out there.
All the Irish peeps, the luck of the Irish, and is representing today. So just wanted to note that because you look great in green.
Merci.
But my closing thought today is actually from a keynote speech I heard last week. If any of our clients are listening, they know I was out of the office for a few days attending a leadership conference down in Austin. And one of the keynote speakers during that conference was a retired US Air Force colonel. Her name is Dee Dee Hatfield. And now, of course, all of us advisors sitting in this room, we hear US retired Air Force colonel. We're expecting a conversation around what's happening, right, in the Middle East and giving us some context. Her entire keynote was about the human side of leadership, why trust and communication is important on team building. And so it threw all of us for a loop to be having this emotional kind of conversation with someone who has a very storied and successful military career. But one of the things that she talked about was the importance of saying the hard thing. And this could be with your team as a leader, it could be with friends, it could be in a romantic relationship or partnership. But avoiding the hard thing typically only leads to more hard things.
Mm,
So, one of the things you mentioned, and it's very simple, is to ask the question you have been avoiding and then be comfortable sitting in the silence. And I
mm,
thought that was so impactful because oftentimes, even when we can muster up the courage to ask the hard question, we usually just try to fill that discomfort with a lot more words and a lot more talking, and then it kind of derails the conversation. So don't be afraid to ask the hard thing because you have to think about why am I avoiding it, but then what does it lead to if I don't ask the tough question? So ask it and then be comfortable just sitting in the silence to allow the other person to actually be able to give you a meaningful response. So that's my closing thought today. I thought it was really impactful of a thing to remember, especially as leaders and in leadership, that we can sometimes procrastinate and put off the hard question asking, but avoiding it only makes it worse. So
mm.
thank you. Thank you, Dee Dee Hatfield, for that beautiful moment, even though I was expecting a presentation around the Strait of Hormuz.
You're like, but really, what's going to happen? What's the end state of this shenanigans?
But oddly enough, it was the entire investment portion of the conversation. So when Kara
Oh,
Murphy did her
yeah.
presentation, and Kara is a friend of the pod, it was
Yes.
entirely around the impact of the conflict in the Middle East on the economy and markets. So
Yeah.
we
Okay. Well,
did
then
talk
good.
about it.
Good. That checks for Kara.
Yeah.
We love Kara. Awesome. I love
Yeah.
that. It reminds me of a saying that I heard a long time ago that I repeat to myself frequently, which is hard decisions now, easy life later.
Mm,
Easy decisions now, hard life later. I tell my kids that
absolutely.
too all the time. I'm like, got to make the hard choices now and you will
Yeah,
reap the rewards later.
absolutely.
Yeah.
It'll
I love
pay off
that.
in the long run.
Yeah. I love that.
You're my
Um,
partner.
Yeah, so my closing thought today, speaking of my children, is it is my oldest child's goalie. We refer to him
Goalie.
on the pod here. He is 14 years old today. It is his birthday.
Happy
And
birthday,
I
Goalie.
know, happy birthday to my baby, who's like taller than me now.
Right.
So he sounds like he's a man. Sometimes he'll be talking, and I'm like, who is that grown man in my
In my
kitchen?
house.
But he and I think I may have mentioned on the podcast before that I started a tradition a number of years ago where instead of buying my kids gifts for their birthdays, I take them on a one-on-one trip. And we are going up to New York City this weekend, just the two of us. We have some fun things planned, and I'm so excited. And my closing thought is just a reinforcement of the idea that experiences, in my opinion, trump, the gifts that we could give our kids, having that quality time, especially now that he's a teenager. And I just feel like he's leaving my hands as the seconds pass by because he's just getting, he's older and wants to hang out with his friends and has his own things going on. But just getting away and, going on a trip and having that quality time together is always so much fun. It's memories that we'll always have. And I only have basically 5 more summers with him before he goes to college. So that's my closing thought. Time flies. It's precious. Take the trips, have the memories, the experiences. You'll never regret that. So I cannot wait for this weekend. I'm so
I'm
excited.
excited. I'm
It's gonna
excited
be
for you
so
guys. I hope the
fun.
weather is nice so
It's
you
not
really
gonna
get
be.
to. Oh,
It's gonna be very cold. That's okay. We'll still
I
make
was like, New York in the spring is fantastic. Like, I hope you get great weather, but at least you'll have great experiences. I'm sure eat some really good food.
it. Yeah, we're
So
gonna eat
I'm
some good
excited for you.
food. Yeah, I wanted to see. I was like, let's go to a Broadway show. He was like, no, I'm
Oh,
good. Can we go to a hockey game? I'm like, dude, really? More hockey? Don't you have enough hockey? I have enough
right. And you're
hockey.
not tired.
So we're going to catch an Islanders game because the Rangers aren't in town. So we're gonna go like
Okay.
30 minutes outside of the city
Uh,
to an Islanders game. It'll be fun though. I can't wait to
yeah.
see like New York peeps at a hockey game. I think it's gonna
Right.
be
Oh,
level.
yeah. I hope it's a good time. And of course, today is Goalie's birthday, but it's also your birthday week as well. So happy belated birthday.
Thank you. Thank you so
So
much.
hopefully you guys squeeze in something you want to do on the trip too.
Yeah, we always do. He's always so funny. He's like, Mom, do you want to go to such and such store and buy yourself something? I'm like,
Oh,
thanks. Very generous of you.
yeah. I would love to
To
spend my own
offer,
money
yeah,
on my
to
birthday.
offer being my own money spending. That's awesome. Love it. So, anyway, thanks everybody for tuning in to another episode. We hope this is helpful. As we said, reach out if you have any questions or need any support. And until next time.
Live richly.
Thanks again for tuning in. If you enjoyed today's episode, please be sure to subscribe and share it with someone who might benefit from it. Friendly reminder that this is for informational purposes only. For additional information, please visit us at www.curoprivatewealth.com. Until next time, live richly.